Imagine owning the apps that 3.5 billion people open every single day. Instagram when you wake up, WhatsApp to message your friends, Facebook for news, Messenger for calls. That company is Meta. And whether we realize it or not, Meta today controls one of the largest attention networks in human history. So, before we even talk about numbers or the stock price, the first thing we need to understand is what Meta actually is and why its business is so powerful. Meta Platforms is the parent company founded and led by Mark Zuckerberg, but most people do not interact with Meta directly. Instead, they interact with the apps Meta owns. The biggest ones are Facebook, Instagram, WhatsApp, Messenger. These four apps together form what Meta calls the family of apps. And the scale here is absolutely insane. Today, Meta platforms are used by around 3.5 billion people every single day. 3.5 billion people. Think about that for a moment. That means almost half the planet logs into Meta product daily. When people wake up in the morning, many of them check Instagram. During the day, they message friends or colleagues on WhatsApp. They scroll Facebook during breaks and they use Messenger for calls and chats. For billions of people, these apps are simply part of their daily life now. But the real power of Meta is not just that it owns these apps. The real power is that it owns human attention. Every minute that people spend scrolling on Instagram, watching reels, messaging friends is time spent inside the Meta ecosystem. And where attention goes, advertising money follows. That's why companies around the world spend billions of dollars every year advertising on Meta platforms. Now, this brings us to one of the most important concepts in investing, the moat. A moat is basically something that protects a business from the competitors. And Meta has one of the strongest moats in the tech industry. There are three big reasons for this. First is networking effects. So, if all your friends and family are on WhatsApp, you will also use it. If creators are posting on Instagram, users will come to Instagram to watch that content. And because users are already there, creators continue posting there. This creates a powerful loop that is extremely difficult for competitors to break. Second is data advantage. Meta has been collecting data for years about what users like, watch, share, and interact with. This allows the company to show extremely targeted advertisements, and targeted ads are far more valuable to advertisers. The third moat is distribution power. Meta can launch a new feature and instantly push it to billions of users around the world. For example, when Meta launched Reels to compete with TikTok, it did not need to build a new audience from scratch. It simply introduced the feature inside Instagram and Facebook where billions of people were already active. And that kind of distribution power is something very few companies in the world have. So now that we understand how powerful the business of Meta is, the next question is simple. Do the numbers actually support this story? Now let's look at the financials. First, the size of the company. Today, Meta Platform has a market capitalization of roughly $1.55 trillion dollars that already put it amongst the largest companies in the world. But what is interesting is the valuation. Right now, Meta is trading at a trailing PE of around 25 and the forward PE is just under 20, around 19.9. Now, why is that interesting? Because this is a company that is still growing revenue at more than 20% per year for many years. 20% year revenue growth for a market cap which is $1.5 trillion. Dollars. For a business with this kind of scale and growth, that valuation is actually quite reasonable. Now, let's look at the revenue growth. In 2022, Meta generated around $117 billion dollars in revenue. By 2024, that number had grown to around $165 billion. Dollars. And in 2025, Meta reported approximately $201 billion dollars in total revenue. So in just 3 years, the company has grown revenue from 117 billion to over 200 billion dollars. That's a massive increase. Even if we just look at the most recent jump from 165 billions in 24 to 201 billions in 25, that's an increase of roughly 22-24% in a single year. Very few companies at this scale are still growing this fast. But revenue alone does not tell the whole story. What really makes Meta impressive is its profitability. If we look at its most recent quarter, Meta generated nearly $60 billion in revenue. Out of that, the company produced about 24.7 billion in operating income. That means the operating margin is roughly 41%. In simple terms, for every $100 Meta earns, about $41 become operating profit. That is an incredibly profitable business model. And the reason Meta can achieve margins like this is because once the platform is built, the cost of serving billions of users does not increase proportionally. So, as revenue grows, profits can scale even faster. But this brings us to the next important question. If the business is strong, if the revenue is growing, and if the company is extremely profitable, then why has the stock been under pressure recently? And the answer lies in just one word: spending. So let's talk about the spending. In 2025, Meta spent roughly $72 billion in capex spending. Most of this money went into building data centers, AI infrastructure, and computing power. Now, on its own, $72 billion is already a massive number. But what really caught Wall Street's attention was the guidance for the next year. For 2026, Meta is planning to spend somewhere between $115 billion to $135 billion. Yes, that means the company could almost double its capex spending in just 1 year. And most of this investment is going into infrastructure, things like GPUs, data centers, and building large scale AI models that can power the next generation of Meta's products. Now, this is where the divide begins. Some investors believe this spending could make Meta a dominant AI company in the future, but others are worried that the company is spending too much, which could pressure profits in the short term. And the uncertainty is one of the reasons the market has been reacting cautiously. Now let's look at the stock price itself. If we pull up the chart for Meta on TradingView, the stock is currently trading at around $613. But what is interesting is that the stock previously touched a peak of around $794. So from the peak, the stock is currently down by roughly 23%. And when you zoom out a little further, something even more interesting appears. So if we see here, since April 24, the stock has only delivered around 16% returns. That means in almost 2 years, the stock has not moved dramatically, despite the company reporting strong revenue growth and high profitability. So the big question becomes why? One of the key reasons, as we discussed earlier, is massive spending on AI infrastructure. Markets don't always reward companies immediately when they invest heavily for the future. Sometimes investors prefer short term profits over long term bets. But companies like Meta are playing a much longer game. And that brings us to the final question: is Meta stock worth buying today? Now, before I share my view, let me quickly say this. This video is purely for educational purposes. I am not a financial advisor, and this should not be considered a financial advice. Always do your own research before making any investment decisions. But if you look at the business, the scale of its platforms, the profitability, and the investments it is making in AI, Meta is clearly positioning itself for the next phase of internet. Now, whether the bet pays off or not will determine how the stock performs over the next decade. But one thing is certain: Meta is not just a social media company anymore. It is becoming a massive technology and AI platform. Thank you for watching this. If you like the video, please do subscribe the channel for more such insights.